Hi everybody, welcome back to the Advanced Mortgage Solutions podcast. I'm your host Joel Sadler, and we've got our guest and founder of AMS, Scott Miller. Welcome, Scott.
Oh, welcome, Joel. Good morning. Nice Canterbury morning out there, sunny. A little cold, but we'll have a nice day. I'm absolutely sure of it.
Yeah, I agree. Sun's streaming through the window here.
Yeah.
First of all, this podcast is around buying your first home and a little bit of property investment stuff in there as well, specifically focusing on mortgages. So if you like this type of content and you're a regular listener, please like and subscribe to the channel. Hey Scott, since we last caught up about a month ago now, it's roughly 4 weeks, end of June, we're now at the end of July, there's been quite a few changes. Do you want to run us through the changes in the marketplace and how that might affect people looking to get a mortgage?
Yep, absolutely. So we had an official cash rate announcement a couple of weeks ago that had a small movement of 0.25 in the upward direction, unfortunately. That was fairly well priced in by the markets, so the banks didn't put up their rates by much. If anything, it went up by 0.1 of 1%, not the 0.25 that the actual rate increased. But as I said, that was pretty much pre-priced, and it was pretty much signalled by the Reserve Bank that was likely to happen. And I think that's why the banks went ahead and pre-priced that sort of increase. What does it actually mean? Well, not a lot of change to the interest rates, to be honest. There was a small tick up on, say, the 6-month and 1 year rate, but the 2, 3, 4 and 5 year rate didn't change at all. So not a lot of change. How does that affect first home buyers? A small change like that wouldn't make a big difference to your mortgage repayments. And it's also not really enough for the banks to start reviewing their assessment rates. So for those that aren't aware of assessment rates, the banks sort of place a little bit of a margin in the bank calculators that we use to make sure that the loan is affordable. Obviously, as rates start to drift up, that servicing rate or assessment rate also starts to drift up, but we didn't see an increase in that. So because it was only 0.25, it's not a big increase. So what we're finding is the assessment criteria, even after the OCR announcement, hasn't changed since what it was before the announcement. So really happy days.
Oh, that's good. No, that makes sense. And did they? Was there any signals around are rates going to continue to sort of rise or hold? I mean, that's always a big question, isn't it? But what are your thoughts on that side of things?
Yeah, look, I think the war unfortunately has really taken a turn, particularly overnight. I think China's got involved with supplying Iran with shoulder-mounted rockets or something, which are like what, But anyway, that will sort of have an effect in the markets out there, particularly the financial markets. Inflation is running pretty much where we thought it would be running in New Zealand, outside of the effects of the war. So transport costs, petrol, running costs, fertilisers, all those sorts of things have artificially bumped inflation a little higher than if the war wasn't there. But if the war wasn't there, then we're sort of cruising along exactly as had been predicted. So with that sort of backdrop, I think we could be looking at 1, possibly 2 more rate increases before the end of the year. And let's be honest, that's not far away now. Tomorrow's August, so it is so close. But again, those increases, 0.25 at most. Likely 1, possibly 2. Look, we've been sort of forecasting that for a while now, due to the information that we receive from chief economists and the feedback from the Reserve Bank and those sorts of things. So it's sort of steady without being spectacular, and that's a good thing. We do really need that security out there moving forward, particularly coming into a summer, break. It gets very, very busy from now to sort of Christmas. With people starting to list their homes, the birds are twerping, the house is looking as good as it can. Certainly, vendors and sellers are aware of this and do sort of hold off to put their houses on the market. And then, of course, naturally follows the buyers, So we're expecting it to be a very busy year. Everything's moving towards that, particularly in Christchurch, not so much Auckland, Wellington. They're really still stuck in the doldrums, unfortunately. Speaking to some of my counterparts up there, they are exceptionally quiet. We're here, we're rocking along quite nicely. So
nice.
There is differences, depending on where you are in New Zealand.
Yeah. And tell me, if someone's looking to buy, in Canterbury, whether they're a first home buyer or, as you mentioned, someone moving from out of the Canterbury area into Canterbury.
Yeah.
I imagine we're heading into August now, so I would think that it's probably a good time to kind of start working with someone like yourself to get your ducks in a row when the listings really do start to come on around that spring into summer, don't they?
Yeah, well, look, if you're lucky enough to have a 20% deposit, then your pre-approval lasts for 6 months. Well, that's clearly going to put us past Christmas now, so you're right in the hot seat there. And it doesn't matter if you're not quite ready now, you will be ready within that 6 month period and have that Christmas rush absolutely covered off.
Nice.
If you've got less than a 20% deposit, then you'll get a 4 month approval, which puts us right on Christmas. So again, regardless of where you sit with your deposit, any kind of pre-approval application now is going to see us through to that Christmas period. Nice. It is an ideal time. It also means, I'd encourage not to leave it too late, because right now the turnaround times for assessment with most lenders is 2 or 3 days. It is super quick. We come up to Christmas, it's 3, possibly 4 weeks before you'll get your pre-approval approved, because everyone in New Zealand is just trying to get their finance sorted. So there's something to say, get in a little earlier, because you know that your pre-approval period is going to last that period anyway. Even if you don't want to use it or start seriously looking for a month or so, there's really no downside.
That's exactly what I was going to ask, is what's the turnaround time, and you've just nailed that on the head. So now it's perfect to get in quick.
Yeah, look, it happens every year. The banks are aware that it happens every year, but they just can't scale up for 2 months and then, then they've got all of these staff after Christmas that are sitting around twiddling their thumbs. So it's sort of like a fact of lending, really, that things slow up when things get really busy, and understandably, unfortunately.
Yeah, and then you did mention the pre-approval, either 4 to 6 months depending on the deposit amount. What actually, that's a really good point. What actually happens when the pre-approval expires? To say, you get pre-approval now, and then you don't quite find the home, or you might miss out on a couple of homes, and then something pops up in January or February which is outside of that pre-approval process. Like, is it reasonably easy to roll that over? How does that part work?
Very easy. Look, the thing is that the first time we catch up with clients is the longest time. The meeting could take an hour, depending on how many questions the applicants have. But once we've got that information, it's simply giving that information a bit of a tickle. We have to get some new consent forms and things for the bank signed to make sure that they know that the clients want to make a new approach. So instead of coming into the office for, say, up to an hour, if it takes 20 minutes, again, it comes down to how many questions they have, but it would take 10, 15 minutes at the most to get that renewed. And then it's just a wee collection of things that you'd expect, like wage slips and bank statements, and an update maybe on your KiwiSaver total, because after 6 months or 4 months, you'd hope your KiwiSaver has gone up a little since the first application. It could put you in a bit of a better position than you were 6 months ago.
Awesome. Okay, well, that sounds pretty smooth. Yeah. All right. Look, for those that have listening to the podcast today or watching it on YouTube, and you're looking to get into the market now, as Scott said, obviously the turnaround time is under a week at the moment. That may change heading into spring and summer. So, sounds like the good time to reach out and get the ball rolling. So, Scott, how would someone do that? How do they work with you?
The website's the way to go. We've got all the contact details of the advisors here. We've got contact forms that you can put a bit of information in to help us through the assessment process and speed it up a little. There's calculators. There's how to buy your first home. There's all sorts of information. It's all free of charge and there to be used. But most importantly, the ability to be able to contact us to say, hey, Scotty, we're ready to start the process. So that's www.advancedmortgagesolutions.co.nz.
Brilliant. All right, nice Scott. Thank you. We'll see you on the next episode.
Yeah, thanks, Joel. Enjoy the day.